The bell hasn't rung, but the fight is already on. Traders are bracing themselves for what could be a historic day. The New York Stock Exchange is chaos, red arrows everywhere, traders shouting, panic in the air. It's a scene of utter pandemonium. The Dow is in freefall, all triggered by one word: tariffs. The impact is immediate and severe. Trump's new wave of tariffs has sent shockwaves through the market, hitting an already fragile global economy. Analysts are scrambling to make sense of it all. This isn't just another dip, it feels like a turning point. The atmosphere is thick with uncertainty. Tech giants like Apple and Nvidia are getting hammered, their global supply chain suddenly a liability. The tech sector is taking a massive hit. The auto industry is reeling too, as semiconductors become the new battleground. Production lines are grinding to a halt. Investor confidence is evaporating, and the fear is that innovation itself could seize up. The future looks increasingly uncertain. Let's break down what's really happening. We need to understand the full scope of this crisis. The story goes that Canada is poised to steal America's tech crown. It's a narrative that's been gaining traction, especially as global supply chains shift and governments scramble to secure their own chip supplies. Headlines claim a mass exodus of factories and talent north, but the reality is more measured. While some companies are eyeing Canada as a safer, more stable option, the scale is far from a tidal wave. Canadian firms like Magna are adapting, diversifying supply chains to dodge tariffs, not conquering the chip world. Their moves are calculated, focused on survival and flexibility in a turbulent market. Investments are focused on resilience, not revolution. Companies are pouring money into making sure they can weather future shocks, rather than trying to leapfrog global giants. Canada's government is boosting research and packaging, not building megafabs. Funding is flowing into innovation hubs and university partnerships, aiming to strengthen the country's technical know-how. The idea of Canada replacing Asia or the US in chip manufacturing is pure hype. The infrastructure, scale, and expertise needed for such a leap simply aren't there, at least not yet. Building advanced fabs takes years and billions. Canada is playing to its niche strengths. Instead of chasing the impossible, it's focusing on what it does best: specialized components, research, and packaging. What's really happening? Canadian industry is hedging its bets, strengthening R&D, and securing supply lines. It's a strategy built on caution and long-term planning, not flashy headlines. No overnight Silicon Valley here, just smart defensive moves. The transformation is gradual and the ambitions are realistic. The Canadian takeover is a myth. The real story is about adaptation, not domination. Instead, Canada is carving out a specialized, secure role in North America's tech ecosystem. It's about partnership and filling gaps, not replacing the giants. It's a story of pragmatic adjustment, not a dramatic coronation. Canada is quietly building its future, one careful step at a time. Let's look at the numbers behind the headlines and see what's really driving Canada's chip ambitions. Let's talk numbers, because the headlines are misleading. You've heard about a 300% tariff on semiconductors. That's fiction. The real tariffs? 25% on a range of Chinese goods, up to 60% on some older chips from state-backed Chinese firms. These are targeted measures, not a blanket ban. The focus is on China, not Taiwan, South Korea, or Japan. The 300% figure is a wild exaggeration, likely born from confusion over unrelated anti-dumping duties. The real tariffs are disruptive, but not apocalyptic. So, what's actually happening in the markets and industries? Let's dive deeper into the current scenario and understand the real impact. Stocks plunged on the news, not because of a mythical 300% tariff, but because markets hate uncertainty. Investors are wary, and this sentiment is reflected in the volatility we see. Tech and auto industries are scrambling, lobbying for clarity, and accelerating supply chain diversification. Companies are reevaluating their strategies to mitigate risks and ensure stability. No, they haven't crashed, but they're facing major headaches and higher costs. The increased expenses are due to the need for new suppliers and the complexities of shifting logistics. There's no mass exodus of factories. The US remains a global innovation hub. American ingenuity continues to drive progress and maintain a competitive edge. Billions are being invested in new American chip plants, thanks to the CHIPS Act. This investment is crucial for securing the future of technology manufacturing in the country. Companies like Intel and TSMC are building massive fabs in Arizona and Ohio. These projects are set to create thousands of jobs and bolster the local economies. The real story is strategic adjustment, not collapse. Businesses are adapting to the new realities and finding ways to thrive despite the challenges. Some products will get pricier, some companies will struggle, but the industry isn't dead. The market is evolving, and with it, the strategies of businesses. The narrative of overnight industrial flight is fiction. While there are disruptions, the core of American industry remains strong and resilient. American tech and auto sectors are wounded but adapting. They are investing in new technologies and processes to stay ahead. This is a new, more complicated global landscape. Companies must navigate these complexities with strategic foresight and agility. Let's compare the claims to the facts. By examining the data, we can separate sensationalism from reality and understand the true state of the market. Time to separate headlines from reality. Claim Trump imposed a 300% tariff on all semiconductors. Fact: tariffs are 25 to 60%, targeted at certain Chinese goods. Claim Canada is taking over as the world's chip leader. Fact: Canada is investing in niche strengths, not mass production. Claim US tech and auto industries have crashed. Fact: they're adapting and diversifying, not collapsing. Claim companies are fleeing to Canada. Fact: supply chains are diversifying, but US investments are growing. The real story is one of challenge and adaptation, not collapse or coronation. So what's the bottom line? The idea of Canada stealing America's tech crown is hype. Canada is adapting, not conquering. The US is reshaping, not collapsing. The 300% tariff is a myth. Real tariffs are targeted and strategic. The global chip supply chain is realigning, accelerated by tariffs and the pandemic. Watch the new fabs, the investment flows, and China's response, not just the headlines. The future will be shaped by long-term strategy, not a single day's panic. The signal is in the strategy, the rest is just noise.